Well, hello there, Maverick Currency traders. This is Rob. I'm joined by Ankit Sharma. This is the Currency Room, and look at this last week of July. And then we'll close the books, we'll do the accounting, send out payouts, and then we're going to be on to August. In this session, we're going to be talking about the news of the week. We're going to look at the broad market, score everything from a +3 to -3, and that's going to tell us where to go look for our trades.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
Let's first start off with equities. Equities are completely bulletproof here. What I mean by bulletproof is that any bad news is being discounted. And we are definitely what's called climbing the wall of worry. I've been talking about this phrase here for the last couple of weeks, talking about how it's a really good thing that there are things people are worried about. Bull markets typically run right through those. It's only when people are no longer worried about things where you actually start to get some market tops. So as long as there's people on the sidelines doubting this move, waiting for a pullback to get in, this market is likely going to continue to go higher. And that's exactly what we've seen. Now, Malka, you've been trading for about 15 years now. We've seen all sorts of markets, but this market it comes about every 6 months to 12 months. What are your thoughts about these markets where they just never, ever dip?
I know exactly what you mean because, I think, like this happened more often than you think. And, and I was kind of giving a reference, like this kind of reminds me of like the 2021 markets. I mean, it was a very similar situation. But yeah, I mean, you always, you end up getting to these points where, we use or we hear the term, it's the most hated rally. It's just because it just keeps climbing up. It's not a big percentage gain, but it's slowly chipping away. And that's why we use the word melting up. And again, that's where a lot of people on the sideline, he's moving up. And then you have the other money comes in, and then you end up getting a blow off top. So it's funny that as you trade for a long time, you're able to sort of give yourself a reference to be like, I remember when this happened last, or I remember when that happened last. And I think this is exactly what it is. It is just one of those market cycles that we are in where there's not a whole lot of worry, not a lot of changes happening. And there's actually more people on the sideline than you want it to be. And that just keeps the market elevated. And this is where we use the term, don't fight the markets. And that's what it is. You just play the markets. And this is one of that market situation where volatility is dropping and the markets are just climbing higher. So it's just working in a tandem. And like you use the term bulletproof, that's what it is. There's no bad news can derail it. And it just keep going until it has its finishing point. So like any market cycle, any price cycle, they go in this fashion till the change happens. So right now we have no change. We have what we have in front of us. And I think we'll probably see a continuation like that, especially as we are in this peak summer trading environment.
And there was something you said in there called the blow off top. You kind of stole my thunder because that's exactly what I'm going to talk about when we get to the S&P section. But let's go ahead and finish this out. We heard from the ECB. There was no changes, no difference, and probably a little bit less likely to cut any rates further from here. And the cryptos did pull back this week. Not a huge pullback, but a decent pullback. So if you are looking for a market that's had a little dip that is very, very bullish, then crypto is one of those markets. Let's talk about what happened last week. Let's talk about the Japanese elections. So on Sunday night, we had the Japanese elections, and not a lot happened. We were expecting there might be a big move, and the yen firmed up a little bit. So we got the yen firmed up a little bit, but the big news that happened this week in Japan was the US-Japan tariff deal was announced, and the Japanese stock market jumped about 2%, and that actually helped the yen strengthen a bit. We've really liked weak yen So in any time the yen bounces, it's almost like a call, say, hey, is this a great short opportunity? We'll take a look at that. And then throughout the rest of the week, really nothing of any note. We did, again, hear from the ECB. They left rates where they were. So a pretty quiet week on the news front. So what did that mean for all the markets? Let's take a look at the final numbers. Stock market went up 1.5%. International up 1.5% as well. Crypto, 2% pullback. 2% is a very small pullback when you take a look at the scale of the rally it's had. But again, any pullbacks should be looked at as, oh yes, finally, we're getting a good opportunity to get in something. We'll take a look at some of the cryptos this week as well. Gold has also hit some major resistance at an all-time high and come down. I think gold is just inevitable that is going to break to the upside as well. But in the near term, I actually think gold has got a little bit more downside as it's really just stuck in a trading range. Let's take a look at this S&P. And this is exactly what I was going to go over, Ankit, was that here we've got this breakout of this base, but a lot of times breakouts of bases are powerful and they've got lots of money and volume behind it. This one is just a slow, steady climb higher. And this is more like what I call a rising base. So a rising base is a base, but it's tilted to the upside. Most of the time, what happens with the rising base is you get the blow off top. You get that big 2-3% candle where everyone is finally, remember, we talked about the wall of worry. The blow off top comes when everyone's like, you know what? I've got to jump in. I've got to get in. And all the shorts who have just taken so much pain says, I got to get out. This is never going to change. This irrational exuberance is never going to go away. That's where you get to blow off top. And that is usually where you then get a pretty significant pullback off of those levels. Here we are in late July, going into August, which is usually one of the lowest volatility months. I see this market actually going fairly significantly higher here over the next 2 to 3 weeks. I am the most bullish I've been in a very long time. With that being said, I am very short-term bullish. But I realize we are running into the worst 6-week period of the year starting in September 1st through the 15th. I actually think it's going to start a little earlier this year because of where we are in the market cycle. I'm really only looking to be this bullish through August 15th. And then after that, I'm going to get a little bit more cautious as far as equities go. What does this mean for currencies? Not much. Not much at all, because in Forex, we haven't seen any correlations. Typically in a market like this, Aussie and Kiwi are soaring, dollar and yen are plunging, Swiss franc is plunging, and the European currencies, the euro and the pound, are in the middle. We have not seen that at all. We have seen zero correlations, so we can't count on there being any correlations at all. I've been pounding the table on dollar yen being the best trading pair. It wasn't the best trading pair this week. Euro dollar would have been, but you can see it was pretty close to being one of the best ones. I still like dollar yen as a trading pair, not as a trending pair, but as a trading pair. But you can see Euro Swiss franc are maintaining their strength. That is where the strength has been in this market, and they are maintaining that strength for sure. Crypto's had a pullback, Bitcoin 1%, Ethereum 3%, but this is off a 18% run last week. So let's keep that all in mind when we take a look at these numbers. That this is a pretty small pullback in relation to the rally it's had. Let's go into the bond market. Bond market, not much to talk about. Dead in the middle, 4.6 to 4.2. We are dead in the middle of this range. The market is very happy here. The dollar is very neutral here as far as its relation to bonds. We'll take a look at the dollar here in just a second. And here we have this big run in crypto. And that's what I'm talking about. Huge run. We've had a very, very mild pullback. Take a look at the last 2 candles. We've had 2 candles that had some pretty long lower shadows. They recovered, but you can see we have upper shadows to where the rally was not ready to start yet. So this is just showing you we're stabilizing. We're stabilizing some prices here around this area. So just think more consolidation in this area, but this is very bullish. We should see a resume higher anytime here over the next month or two. Next week, let's take a look at our economic reports. We've got the CPI coming out from Australia. You're trading the Aussie dollar, definitely be taking a look at this one. We have our first central bank on Wednesday, the Bank of Canada. No change, 2.75%. And we'll have to hear what they say about the economy. Canadian economy has not been as strong as the US economy, but we're seeing some signs of stabilization. Not as much as the US, but definitely seeing some signs of stabilization. We also have the FOMC next week. They are not expected to cut any rates, but we actually have heard from one or two of the central bank voters that say they are going to vote for a rate cut in July. Here's my call on the Fed. No rate cut today or this week, but we do get a rate cut in September. Anka, what do you think about that call?
I'm pretty split on this one. I personally think that probably no change, either this meeting and next meeting. I think just looking at where markets are this year versus it was last year. One of the things that we have seen is the inflation, or the expectation for these the bond yields has not really given us any indication like last year, where if you look at the charts, even in lieu of like the rate cut that we had, we actually saw economic numbers were getting a little weaker, and we just saw the bond yield start to move lower. I think we saw that market phenomena, so it's actually was getting priced into the markets. Right now, I'm not really seeing that at all. Either it's in the bond yields, they're holding steady. I know the Fed was expecting more of that inflation to pick up from those tariffs later in the year. So I think there's a lot in the works, but I need to see some data that would really support it. So I think we are probably data dependent before I can really make that firm of call, because I think underlying that the fear is still there for the inflation to pick up. So I think it'll be interesting to see how this unfolds. But compared to last year, I think last year was much easier as we started to see things move lower in anticipation of it. I'm not really seeing that anything in the price action right now.
I do agree with you that the Fed is in a tight spot. The data says that they should cut. But if I was on the Federal Reserve and I saw tariffs were just getting implemented, I think I'd have a very hard time voting for a rate cut. So we'll have to wait and see. We have our third central bank report on Wednesday. So that is 3 all on Wednesday. Bank of Canada, US, and the Bank of Japan. We'll take a look at that. I like the yen short. It's just about timing. It's just about when are we going to actually get that rollover. And then last Friday, August 1st, usually if Friday falls on the 1st of the month, usually if the first falls on the first Friday of the month, they kick it to the 8th, but it looks like we are getting the US payrolls report on this Friday. So lots of stuff happening on Wednesday. Wednesday is very, very heavy along with Friday for news that's going to move these markets. Let's go through all the currencies, score them from +3 to -3. I'm going to start off with cryptos. I'm going to start off with Bitcoin. So you can see Bitcoin's basing. It's just simply basing. And it looks like the low end of the base is around 115,000. You've heard me talk over the last couple months about I'd like to get in on bases on pullbacks, but not a full amount. Not a full amount, but like a half amount. Because I also want to be able to buy breakouts. Here's the problem, is that if you're only buying breakouts, you're going to buy a lot of false breakouts. Here. You may even chase one here. And all of a sudden, that puts you in a really bad situation because your cost basis is up here. And then it starts trading all the way down here. And then you get a one-day spike, you get stopped out, and then it rallies back up and finally breaks out. We all know this story. We're all familiar with it. So I like to identify things that are strong and say, hey, you know what? Every time it gets down to this low 116,000, high 115,000, I'm going to accumulate 25% of my desired position. And if you're picking up little pieces down here, like you could have picked some here, all of a sudden, when it runs up to this 120,000, you're in a great situation because you're profitable And if it breaks out and runs, you love it. But if it breaks out and then fails, it's like you're still profitable. You're not put in any position to where you're stressed or have any worry. So I do like Bitcoin here. I think it's going to be a little bit of time till it rallies, but this is the perfect market environment for cryptos to rally. And we've seen that. We've seen how great this backdrop is for cryptos. Here we have Bitcoin Cash. This looks good right here, right now on a pullback. See, we pull back. This is what I'm talking about. We went to break out and then we got the failure. If you bought it up here, it's painful. This failure is painful. If you bought it down here, it's comfortable. So we want to be buyers on these lows of basis. Ethereum is by far the strongest. Ethereum is not coming down. It looks like 3,500 is where the bottom of its base is. So same thing here. If you want to be in Ethereum, I like Bitcoin better, but if you want to be in Ethereum, start to look to grab in the low 3,600, high 3,500. Again, just small little pieces of your eventual profit that you want. Litecoin also very strong. We run up, we're having a pullback here. So this again is where it makes some sense. If you want to be in cryptos, then you're going to be looking to accumulate in these little down periods. Not a full position. Don't go full boat here. Say, oh my gosh, I'm going to take my full position, because we don't really know how deep this pullback is going to get. We have no idea. Take a little, I call it a teaser position. Take a teaser position, 25%. And if it works its way up lower, then you can grab a little bit more. And then ultimately you'll have your ultimate stop where you say, okay, this thing is broken support. I'm out. I'm going to go somewhere else. So in a nutshell, I like crypto long. I don't know when the timing is for it to break out. I have no idea. No one does. And I don't even have a good opinion on it. There are times where I say I have a very good opinion that's going to be this week. I don't have that opinion. But I do have an opinion that if you acquire it at the low of its bases, that somewhere over the next 3 to 4 weeks, we're going to get a nice breakout to the upside and you're going to be in a good position. So that's my outlook on crypto. I'll take it into your outlook on Forex.
Absolutely. But let's just start with the US dollar. And I must say that I was flat out wrong when it comes to the direction. I really, based on that, what we saw on the chart, I really thought the dollar was out of that downtrend. As you can see that the first 4 days were just down. So where do we go on dollar here? I think we're just kind of sideways. So, it's not it's not as strong of a trend, but it's not as weak either. We got that momentum, and I don't know how much that has to do with the Japanese election. But every time we see yen that does well, we see dollar struggle, and that's exactly what we had in the first part of this week, where the yen was kind of holding it, had a little bit of a rally from those elections, and then we had the Japan deal, so that held the yen a little bit better, and we saw the dollar kind of underperform. And then here we are in the second half of the week. We're seeing the yen weakens and then the dollar strengthens. So I think it really comes down to what the dollar's going to do is what the yen's going to do. I think this week we have these central banks, and I think it's a perfect scenario for some breakouts to happen, especially when it comes to statements and guidance. That's what everybody's looking for. So I think the dollar is kind of in the middle there, but yen, if I take a look at yen, this looks like it's prime for a breakout. Almost a month-long consolidation. And I don't see anything on the horizon that makes me think that the Bank of Japan is going to make changes to their interest rate policy. So I think this one would be interesting. And if the yen does break lower, I think then the dollar probably will hold in a lot better. So I think it's really a dollar yen story to really follow what the currency is going to do. But I think yen looks like a better short to me. Dollar, it's just a back and forth. So I'm more neutral on that dollar here. But if the dollars start to firm up once again, I won't mind jumping back on that wagon here to buy those dips. But we'll find out next week. Now, talking about some clear trends, take a look at this Swiss franc. And I talked about it, recently, where Swiss franc seems to be like in this perfect scenario where, risk off kicks in, it breaks out. Market goes up, they go sideways. So it's just, I mean, if you just look at the price action here, I mean, very narrow range is consolidating here. So I don't love this as a short. Trend is very strong. I would only like this to be looking for a downtrend if this really start to make a lower low. But at this point, it looks like he wants to break out higher, despite the fact that the markets are so strong. It's not deterring that Swiss franc down. So I think Swiss franc probably continue going higher till it really changes trend. And euro is kind of following the same pattern here. I mean, take a look at those moving averages and velocity. It did pull back for a little bit, but it's picking back up. So I think nothing really has changed. I was kind of expecting or hoping for some rotation to take place. I'm not seeing a rotation here. So for me, trends are pretty clear. Buy the dips. I think that's probably the right play here. Now, pound is the one I would say that looks the best here. So that's why, again, we don't want to fight the charts. And the chart will tell us exactly where things are going. And this pound was, I would say, was a bit of a difficult trade this week because you can see the back and forth. There's a lot of back and forth. But now, in the second half of this trading week, it did break lower. So we are breaking that support and and look at the velocity -3. So along with the yen, I think pound looks the clearest to me. There's no Bank of England statement next week. There's nothing on the euro front. I think this kind of really opens the door for pound to pair against the best and the worst currencies. So that's the one we're going to take a look at. I really like a pound here. Now, when we go into other currencies, well, I mean, what's CAD doing? Sideways. In a grand scheme of things, these moving averages are just flat. So don't have a strong call on CAD. I know they have a Bank of Canada rate statement next week. They're not expected to cut. I think they're probably holding steady, not really expecting a whole lot out of the CAD here. But you can see that it does have its moments of outperformance and it has moments of underperformance. I think that's just the way we want to trade the CAD and not commit to a direction pretty strongly. So, you're looking at trades that will last you for 20 to 48 hours. That's pretty much it. So that's really how we are trading the CAD here. And then again, talking about some of the growth currencies. I mean, I was excited for the Aussie, but you can see that Aussie pretty much was range bound for the last 3 months. And now is actually starting its own new range here. So not bullish until it breaks out above that resistance. But I think so far, market has always a recipe for this growth currencies to go higher, but it's not. So again, don't fight the charts. I know the trend score is a +2, but it's a very mild sort of a bullish trend. But if it does break out, I'm definitely interested. Now, looking at the trend score for the Kiwi here, again, Kiwi, I would say it's in a very long sideways trend. I mean, we started this sideways trend back in like April. I mean, we are going in the sideways trend for quite a bit of while. So at this point, it's just a range bound. We did bounce off from the support. You can see we did that back in May. We did that in July, maybe even in early June. So right now it's just in a rally mode, but I think rally probably will stall as we get towards the resistance. But in the shorter term, we do have a momentum there. Right now, it's right in the middle of that range there, and velocity is holding up. So I mean, right now, I think it's setting up for another push higher. So I think for maybe next week, we'll probably see maybe a higher Kiwi. But as far as the trend goes, I think those support resistance levels are pretty clear. So it's pretty clear where the trend is. It's pretty clear where things are not moving. I think all we need to do is make sure that we are pairing those things correctly. And again, also trading on a higher time frame because volatility is really low. So in those environments, you're not getting those quick moves that we were getting back in like March and April. It's a slow and steady game, but there's definitely good pairings to be had here. We just have to trade the right currency with the right strategy.
Hey, Anka, you're exactly right on where the market is right now. Euro, Swiss franc, and maybe Aussie later in the week against the pound and the yen. That's just so crystal clear here that that's the trade. I will take a look at dollar yen as well. And I'm only looking at that because I do like the range, and I think they are very negatively correlated at the moment. I love when things get negatively correlated because that tells you that's the best move out there. So let's take a look at some. Let's go ahead and start off with what is stronger between the euro and the Swiss franc. And here is the euro Swiss franc chart. And you can see that for the most part, over the last month, euro's been a little weaker than the Swiss franc, but if we take a look at, over the last couple of days, it looks like euro has become a little stronger. I don't think it's that big of a deal. I mean, today, Swiss franc is up 0.41 and the euro is up 0.31. So I think these are going to be pretty tightly correlated. But I actually do like the euro a little bit better than the Swiss franc on risk on. If it's risk off, I like Swiss franc a little bit better. And then we have to answer the question, well, what do we like better out of the pound and yen for a short? And we come in here, say, okay, what's better between pound and yen short? And we take a look and we see over the last month, they've been really pretty much the same. But if you take a look at where we are here, coming down to the low of a support level, it looks like the pound is going to be weaker than the yen. So that is going to bring up the pair pound or euro pound. And I talked about this euro pound on Thursday on my video saying, I love this setup. I shouldn't say I love it. I said it's a decent trade, not a great trade, but you can see nice high base breakout. And today, a nice candle of 0.5%. That's all you're going to get out of these trades. And as Ankit said, looking for longer time frames, 0.5%, just think about it. We got 0.5% in one day, but it took 5 days before that for it to go 0.5%. It's not moving quickly. So you really need to tamper your expectations. You're not going to make 100 pips on this trade. You're not going to make 1% on it. You're looking for making 0.3, 0.4, 0.5, 0.6%. That's all the market is giving out at the moment. So my favorite pairing is euro pound, but I also wanted to check in on dollar yen. Here's why I like dollar yen so much. Look at the candles. The candles are open at the high, open at the low, close at the high. You can see this was a 3-day run that went from 146 up to 149. That's a 300 pip move. And then we sat up here for a little bit. And then when we got another move, we went from 149 all the way back to 136. And take a look at these candles. These candles are not candles that you would have been stopped out on most likely. And then we bottomed out, got that hammer, and you can see we're on our way back up. I like this one because it's not choppy. It's actually taking directions that are tradable. If you were to take a look at something like Euro Swiss franc, you can see, there's a little bit of an up direction. Let me go down to a 4-hour chart. But, we're getting moves, but look at these moves. These moves stop out everyone. All these moves, they're just not consistent enough. So I like dollar yen, either long or short, just because we're getting decent moves. Ankit, what do you want to take a look at?
Hey, Rob. Yeah, I would agree. I think euro pound was the first one I was taking a look at. The other ones I was thinking is pound Swiss franc. Again, I think we want to take advantage of that correlation here. And if you take a look at a lot of Swiss franc crosses, I mean Aussie Swiss franc, Kiwi Swiss franc, they're sitting at some all-time lows here. I mean, there's a lot more room for this to fall. Look at Euro Swiss franc. Euro Swiss franc is down, below parity. I won't be, this thing is at a very critical point. I mean, from a long standpoint here, it looks like, an amazing area where if it does break, I think this can accelerate. And Euro Swiss franc is below parity for the last 3 years. Could we see some of that here? Absolutely. I think we could see that, especially if there's a divergence that takes place between euro and the pound. Now, that's the first one, Rob, that comes to my head here. The other one I would say is the pound Aussie. I know we don't love the Aussie here, but when I look at the chart there, it kind of looks like it's ready to break down. And you can see that these levels have held multiple times. So if it does break lower, I think there's definitely more. So again, we talk about pace and volatility. It's moving at a slower pace, but you can see where the movement is. And I think this is where you have to factor in that this is a low volatility environment, and we have to trade the right time frame for this. And even a 4-hour chart, I think, would still look good. But getting those short-term moves are not the easiest right now because percentage-wise, things are not moving as fast. So this is a way where you can stay in that trade longer. and catch the move and not have to worry about timing, which is a hardest thing when you're trading shorter term. Even pound kiwi is another one. It's not ready. It's not as clear as pound Aussie, but you can see that this one it has a lot more room fall before it actually hit the support here. So if let's just say that the shorter term, the Aussie actually underperforms the Kiwi, I think this one has a little bit more room to fall as well. And I think for that we can go to the Aussie Kiwi to just see where the Aussie Kiwi's at. And I must say that this thing, it had a nice breakout. You can see, the May and the July we did break out, but then it's kind of fall right at the support here. So again, this is just telling me that maybe for the shorter term, we could see the Kiwi outperform and in the Aussie underperform. And if that's the case, I think I want to go with the pound Kiwi instead of pound Aussie. So we can really decide which one we want to go based on what we see there. So again, I think that's what I'm looking at next week. But just realize that next week, if you for strategizing for next week, we have lots of these events. So you want to keep the powder dry, but then respond when you start to see things move. And that's what I'm looking into next week. Next week is going to be an active, busy week. So we want to keep in mind where the long-term trends are, but we also want to keep in mind where the velocity are. Because let's just say if you're looking for quick moves, I think that's going to be next week, regardless of whatever the direction is. I think some of the news will cause some movement. So I think we want to capitalize and take advantage of that. Back to you, Rob.
Wrapping this up, we do have a busy week. We think that the consolidation we've been seeing, and I've been talking like the last 2 to 3 weeks about ebbs and flows. We've been ebbing. We've been seeing small movement for the last 3 weeks. Is this the week that it comes back? I think it is. I agree with you, Ankit. I think we do start to see more of a flow kind of market to where you can actually get in and make some good pips here. Crypto, I think it's a matter of time before it breaks higher, but I don't have any clear call on timing. We could have another week of consolidation and pullback, or it could break out. But I do like picking them up at the bottom of their ranges. Everyone have a great weekend. Take care, and let's go close out July strong. Goodbye, everyone.